This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Morning, you're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Monday morning from the CNBC TV 18 Motilal Oswal studios. It's going to be an interesting week with, I think we will get to hear some political manifestos, especially the one from the NDA, the BJP, which I think markets will pay particular attention to. I'm Prashant, with me my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning Prashant, good morning Nigel. And such a strong market, right? I mean, the Nifty closed at that 22,500 mark. You have big cues this week. We kick off earnings season on Friday. You have a big listing. There's Bharti Hexacom. And you have so many other triggers. So let's get started.
Well, that's right. And besides the markets, I'm feeling good. Mumbai Indians won their maiden game yesterday in the IPL. So that's good. And Arsenal as well won. So both the teams that I support, they're winning EPL and IPL. I'm feeling good. But we're here to talk about markets, Prashant.
So you know, and we'll talk about IPL and EPL in a bit. But let's just quickly tell you what you need to know as we begin another trading session, right? And I think we've got to start with where things left off on Friday, not where we left off here, because it was flat. I mean, if you look at it, it was not even a 1-point change by the end of it, 3:30 on Friday here in India. But the big talking point, of course, was the US market and the data there, which is the US jobs data. Many at the margin were expecting that number to be weaker than expectations, to finally show that the labor market is cracking. Guess what? Absolutely on the other side. Much stronger than expectations. I think we got a number which was about 330,000. And the expectation, the consensus was at about 214,000. And it was not as if that one number and then the hourly earnings were weak and, you know, the unemployment rate was high, nothing of that sort. Actually, across a range of things within the data point which we get, I mean, there was strength. And I think that really stands out. We got a big jump in yields. The 10-year was up 9 basis points. I think we're at about 4.4, 4.42 actually, as you can see up on your screen. Equities did end higher. So S&P was up about 1, Nasdaq was up about 1.25%. You know, we've said this before, that sometimes the anticipation of something is sweeter than actually getting it. What do I mean by that? You've got a strong labor market, right? You've got a strong, decently well-running US economy. And you've got, you know, the promise, the lollipop of rate cuts sometime down the line in the future. So in a way, you got the best of both worlds as from where you sit right now. Right? And I think that's basically what markets are, I think markets, in a way, rejoice. Oil prices, they jumped to almost 91. This was Friday. But I think this morning, the big headline is that if you look at Brent oil prices, they're down. They're down to about $89 a barrel. It is not what has happened, what has caused oil prices to fall. It is what has not happened, what has led to this reversal in oil prices. Small reversal, right? So there has been no geopolitical escalation. What do I mean by that? Iran had vowed retaliation against Israel. Remember, last Monday, there was there was a bombing in Damascus, and Iran had warned that its embassy in Damascus had been bombed by Israel, right? And they'd said that we will, and some of its top commanders, 2 of its top commanders were killed in that attack. Iran had said that we will retaliate and retaliate strongly. Markets were expecting going into this weekend an escalation. Oil prices had risen to about 91. And, you know, oil markets and prices have been on the edge expecting that. Nothing so far. And I think that's the reason why prices have come off a little bit. And oil is the big one. If it continues to drift lower and if geopolitical tensions ease a little bit, I think that's going to be great news. Now, dollar index steady, no big change at about 104.3 or so. The big event this week is going to be the US CPI. By the way, because of the strong jobs report, many who were expecting the first cut in June have pushed it out by 1 month. I mean, they're expecting a cut in July. And I think because the number was so strong, the inflation number will also be closely watched. That's on Wednesday. Just to sort of come back to the levels here, it was an absolutely flat close, as I said on Friday. You can see that. Nothing, zero, I mean, zero on the change, day-on-day change on Friday. We must not, on the Nifty, break the low of 22,303, which was the recent low that we saw. We're at about 22,500. And of course, on the upside, breaking above the high of 22,619 can stretch the up move a little bit more. Targets based on weekly upper Bollinger Bands at about 23,061. On the Nifty Bank, it's broken above the previous high, which is 48,161. On the upside, Bank Nifty can test the upper end of the rising channel, which is 49,125. On the way down, supports come in at the 20-hourly average, which is 47,948, and the 40-hourly average, which is exponential average, which is 47,695. I think on the index, things perhaps may remain a little quieter. GIFT Nifty will come up on your screen. It's going to be stock specific. And what will you take cues in terms of what to bet on? I go back to that political angle, which is the manifestos, which is what we will get perhaps this week from the ruling party in terms of what they would like to do, what they would like to promise if voted back to power, as all opinion polls are showing. And I think some of those themes in there perhaps will be in focus. It's going to be a strong start if you believe the GIFT Nifty. Oil is down. That's a big positive, incremental positive as we come back this morning. Sonia.
Oh, absolutely. So, you've covered a lot of what the global setup is looking like, right? So, I'm going to focus a little bit of what you need to watch out for in the local market. So, but first, of course, as we know, the global setup is good. The US markets were strong. The Dow was up about 300 points and stronger than expected US jobs report. So, that is, of course, out of the way. But look at what's happening in our own markets, right? The Nifty is very, very steady around the 22,500 mark. And that's where we closed on Friday as well. There was once again buying from foreign investors in the cash markets. Remember, a large part of the money that has come in the last 1 month is courtesy of the domestic markets. But now we're starting to see FII participation as well, which is a very good thing. So 1,650 crores is what we saw in terms of buying from FIIs. Now, this is a truncated week. Thursday is a market holiday. But we have lots of stocks in focus today and through the course of this week. So let me first start with today. It's the season of resignations. You have both Wipro and Bandhan Bank's CEOs that have resigned. Now, Wipro, of course, it will be a sentiment negative. There's a lot of churn of management at the top leadership end, and that's something that the street will definitely not like. So expect some sentiment hit over there. For Bandhan Bank, it has come as a big negative surprise, especially at a time when the board had given a 3-year reappointment for the CEO. In fact, a lot of brokerages have come out with negative notes. Jefferies has downgraded Bandhan Bank to an underperform from a buy. So these two stocks could be under pressure. On the flip side, Titan could perhaps, be stable today, given that the jewelry business has grown 18%, not as much as what its peers, Kalyan Jewelry, has seen in terms of growth, but nevertheless, stable growth coming in from Titan. Now, let's see what you can expect this week. It's a very important week for the market because you have Q4 earnings season that kicks off this week, with TCS reporting its earnings on Friday. You also have retail inflation for the month of March that comes out on Friday, and that could set the tone for what the RBI will do next in terms of moving on rates. So that's an important internal track. And amongst listings, you have Bharti Hexacom that will debut on the exchanges on Friday as well. So after we come back from that midweek holiday, we have lots to track. But purely for today and this week, looks like the going is good and the market has been quite stable.
Well, that's right. Sonia, and besides the holiday that we have on Thursday, which is the trading as well as the clearing holiday, tomorrow there will be a clearing holiday because you have Gudi Padwa as well. So volumes will be interesting to watch. But let's get straight to the market action then. The Nifty appears to be in an uptrend, and the uptrend is pretty much intact. The small cap index, that's where the real action is. It was up more than 6% for the past week itself. It had its best weekly gains all the way since April 2020. And going by the way the Nifty Bank has moved, either today or tomorrow we get to those fresh all-time highs. Well, let's tell you a little bit more about the F&O action then. In Friday's trading session, we saw good recovery from the low point of the day. On the Nifty, it appeared there was some short covering. But on the Nifty Bank, you did see fresh long positions getting added. And that's on a rather low base. Because for the week itself, the open interest of the Nifty Bank, well, it had come down drastically by close to around 30%. 36% to be precise. That's because of the big short covering bounce that we saw on the Nifty Bank. So that could be one of the reasons that the Nifty Bank was up close to 3% in the past week. The Nifty was up only around 1%. So some bit of that short covering has taken place, and that explains why the Nifty Bank was an outperformer. To give you a reference point in terms of the Nifty Bank all-time highs, that's flashing for you on the screen. That's what we hit in December. The options data on the Nifty, well, two strikes were very active. The 22,400 put and the 22,500 call. And just going by this, since the 22,400 put was fairly active with 25 lakh shares getting added there, your reference point becomes around 22,300. But the firm support comes in at the 20 DMA, which is a little bit deeper, closer to around 22,200. So that's the first reference point on the downside. On the upside, since the 22,500 call is getting, seeing fair bit of writing out there, the 22,650, that becomes a crucial mark. So this is the broad range that you're looking at on the Nifty. The stocks that I'm looking at in today's trading session, well, Voltas as well as Blue Star. Now, as a hygiene first, let's just go through what the FI positioning is at. It's at around 43% to around 57%. So that's just a check since we normally do that. The stocks that I'm looking at today, Voltas as well as Blue Star. scorching heat. You'll see some buying in terms of, AC buying as well. And the update coming in from Voltas was beautiful. It looked very, very good. Any which way you want to slice or dice it. So maybe some bit of a rub-off as well. But just keep in mind, both the two stocks are trading at fresh 52-week highs. However, these stocks could be the stocks of the day.
Oh, absolutely. That scorching heat is something, right? Yesterday, Mumbai was, 37 degrees in the middle of the day. And it's only just the start of April.
I think we're about 3 degrees above normal for this point in April, which is hot.
It's scary. It's not just hot, it's pretty scary.
The numbers are interesting, but you can just feel it.
Yeah.
So hot.
Okay, well, let's see how the week and the month goes. But for now, not looking good with the way global warming is shaping up. But on the equity side, we have lots of commentary coming in. So let's get straight to it. Vikas Jain of CLSA says that Nifty's absolute and relative valuations to bonds and peer markets remain stretched. However, he adds that slow action has cooled off investor sentiment from extreme bullish to a marginally bullish reading as per their India Bull Bear Index. He removes Sun Pharma and ICICI Pru Life from their portfolio, adds ITC for its attractive dividend yield and the favourable valuation of its FMCG business versus peers. He says staples and insurance are their preferred defensive sectors over healthcare, utilities and IT. Vikas adds delayed rate cuts makes us keep banks as their preferred large overweight, while the discretionary space remains a big underweight.
Okay, well, let's get you some money market views. B. Prasanna of ICICI Bank says that another stronger than expected print of US jobs data pushed yields higher. He says dollar consolidated its recent gain on relatively better economic activity data and will take cues from this week's inflation data. He says oil prices firmed up owing to heightened geopolitical risks in West Asia and Russia. He adds RBI intervention caps sharp depreciation of the rupee, which is under pressure from a rising dollar and crude prices. He expects the rupee to remain range-bound between 83.1 to 83.6 to the dollar for the week.
All right, and on the bond market, B. Prasanna says global yields attained recent highs owing to strong US labor data, which led to unwinding of faster and larger rate cut expectations. He says crude prices broke higher as well after consolidating between $80 to $90 a barrel. He adds local yields, however, remain supported as MPC outcome was largely on expected lines and inflation print due this week is likely to be benign. He expects a 10-year benchmark bond yield to trade in a range of 7.02 to 7.12%.